Hello everyone, Paul Rogers here. Today is January the 4th, 2018. We are looking at a moon in progress, Ethereum to US dollar 4-hour chart, and Ethereum is breaking out higher. As many of you know that have been part of my channel, I have been pushing Ethereum the last couple weeks, saying that Ethereum is going to be heading to $1,400, $1,500, and it's going to do it in a hurry. I think Ethereum will be over $1,000 today, and I see Ethereum in the short term heading towards 12 to 1300 pretty quick. What's happening is, at least what I've observed, is that Dash and Ethereum have a kind of an interesting relationship. Whenever Ethereum is doing really well, it seems like Dash kind of suffers, and they kind of go back and forth. Sometimes Dash will be worth 2 or 3 times as much as Ethereum, and then Ethereum will catch up and surpass Dash and be worth twice as much as Dash, and they kind of go back and forth. Right now they're at kind of a crossroads. Dash, as you can see, has been kind of sideways a little bit. It had major run-up, retracement with everything else. Everything else, in all fairness, retraced here too. And now it's kind of in a holding pattern, consolidation, where Ethereum is pushing to new highs. So I'd see the next 48 hours Ethereum being worth more than Dash, and Ethereum continuing to head higher. So how do you play this as an investor? Well, the thing to remember is if Ethereum is up, and let's say it's worth double the price of Dash, it's a good idea to probably put some money into Dash at that point. Or if the opposite is true, if Dash is mooning and Ethereum is just kind of left for dead, you're gonna have to be patient. But usually if you pick a contrarian view and pick up things, quality projects, when they're down and no one's paying attention to them, that's the way you make real money. So it's best to take projects that are, or I would say currencies or tokens that have really taken off, and then looking at some other things in your portfolio that you want. Quality projects, look for quality, and then slowly start to put some money into those. It's hard. The thing is, it's hard to tell when something is done running. Like you look at Ripple right now. Ripple was what? I think my first Ripple video, it was, I don't know, 60, 70 cents or something. I mean, it wasn't very high. I was picking up Ripple when it was just before it mooned. Maybe it was around 30 or 40 cents or so, 35 cents. And I just had a really good feeling based on technicals that it would get to around $2.50 and surpass that. The question is now Ripple's heading towards $4. It's still running. Do you sell your Ripple and buy Dash right now? Tough question. I think Ripple's going to run to $5 or $6 before it kind of has a good retracement. So I would expect around that point, maybe it would be a good idea to start buying some coins that are undervalued. And I think Dash is a good one. And of course there's Bitcoin. Bitcoin is mirroring Dash a little bit. They're both a little bit down. I think Dash has more growth potential this year than Bitcoin. And I say that because Dash Evolution is going to be so user friendly, and it's coming out quite soon. So pick up some Dash. The question is when. I wish I had that answer, but the thing is, usually when people jump on a train, when it's moving, especially if it's a big project like Ethereum or Ripple or Stellar, they tend to go in runs. So they'll keep running and keep running and keep running, and all of a sudden they'll have a really big correction. So it's best to use a technique called layering, which is where you go and you set price targets and you slowly start to sell chunks. You want to have a certain amount that you hold on to. You don't want to totally get rid of all your Ripple, obviously. But let's say you made 5 times your money on Ripple, and Ripple keeps growing and growing. You can say, okay, at this point I'm going to sell 10%. At this point I'm going to sell another 10%, and until I sell half my Ripple, and I take that and I put that into other things that have value. That's a good technique, something I use quite often, and it works. But it's tricky, which is why layering is the best technique, not just going and saying all at once, okay, I'm just going to dump this and buy something else that's not moving. Because most likely what will happen when you do that is you'll feel bad, because it'll keep running. It's very hard to pick tops or bottoms, so it'll keep running, you'll feel bad, and whatever you bought will still be stagnant, because you never know when it's going to wake up. So keep that in mind. You have to be very mentally strong to trade like that. It does pay out in the end, but that's why layering can be better. It's just selling like 10%, not such a bad thing. And if you do that a couple times, price keeps going up, you're happy because you see price going up and you didn't sell everything. You're just kind of slowly selling and buying into where you think is the next move. So that's a trader's perspective. That's a trader's perspective right there. So anyhow, I hope you're all having a good day. If you can, in the comments section, you can give me some suggestion on some videos I can make. Personally, what I think is interesting is I would like to do a video comparing ETHLend and Salt to centralized lending platforms that use blockchain, like BitConnect or ETHConnect, or all those different kind of connects that are out there that promises a more or less a stable US dollar rate of return that have become very popular, especially with referral programs. And compare the two. And you know, I'm not going to trash anything. I'm going to give my honest opinion on everything, and let the viewers decide. I know there's some people that hype different lending programs that are centralized to do with blockchain, and other people just bash the heck out of them. And I don't think either side is right, you know, but I'll get more into that into my next video. Anyhow, Paul Rogers out.